Are you trying to play?
Hi everyone. So welcome to the stream today. Really excited for having you as we wrap up in our discussion for the December 2022 examination, and I believe that your revision is going on pretty well, and you are really strategizing yourself to be able to position yourself to pass the examination. This is a Q&A session, so I want to just come around and then take any questions that you may be having, and we share our thought on it. And tomorrow also we're going to be having another session like that at 7 p.m. tomorrow, uh as well on the stream. So if there are any questions you have for me, I mean, we are now in the final days. Something you want me to share my thought on, something you want me to talk about, put it in the comment section for me, put it in the chat box for me. I want to hear from you, and then I'm going to also be sharing some final thoughts with you on the various things that you would have to take into consideration as you prepare yourself to write the exams in December 2022. Like we have like 14, did I say 14? Oh, like maybe 9 days or so to go in that particular case. Probably 9 days. Okay, probably 9 days. This week from us here, I mean, it's been just mock, throughout, mock and discussion throughout for us this week. And it's been an interesting journey. I mean, going through this with our students here. So if there are any questions, something you want me to share my thought on, put it in the comment section for me, put it in the chat. I want to hear from you. Samuel and San on on YouTube says, good evening, sir. Good evening, Samuel. Thanks for joining us on the stream today. And then Ebenezer giving us an emoji of good vibe in the chat. Thank you very much, Ebenezer. So, any questions for me? Something you want me to share my thought on? Now, as we head into the December 2022 examination, it is important for you to understand and be mindful of the various things that you have to take into consideration in order to position yourself to ultimately pass the examination. And like we've said over and over again, and we keep on sharing our thoughts and talking about it, we know what to be in the exam hall. Now, when I say we know what will be in the exam hall, like you know how the question is going to, like the areas that the examiner is going to be bringing up in the exam hall. So the key thing that you have to pay attention to and take into consideration is understanding the fundamental principles under each of the topics. So let's say you're doing public sector accounting and finance. We know there's going to be financial statement preparation there. We know there's going to be financial statement preparation. Now, don't try to figure out and go and master anything. Just understand the fundamental principles when it comes to financial statement preparation. Now, the basic fundamental principles when it comes to the preparation of financial statements in the public sector will be the chart of accounts, and then revenue management and expenditure control. So if you know the chart of accounts and revenue management and expenditure control, then boom, you are going to be able to answer the question. So whether the examiner brings the question on the consolidated fund, which is the central government, or a ministry, department, or an agency, a metropolitan, a municipal, a district assembly, or even other covered entity like a public school, a public hospital, whatever it is the examiner brings, that's not my problem. That's not my concern. My concern is the chart of accounts. Because if you are dealing with the central government, then the chart of accounts will categorize items in the financial statement as follows. You're going to have tax revenue, but you're going to have direct taxes, indirect taxes, you're going to have non-tax revenue, and then grants will come in. Then in the expenditure aspect, you're going to have goods and services. You're going to have compensation. You're going to have public interest, public debt interest. You're going to have subsidies. You're going to have other forms of expenditures. So that is revenue management and expenditure control and with also the issue relating to the chart of accounts. So my recommendation is this: don't try to say, oh, I'm going to master this. No, 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 no. There is no need to master anything, because the chief examiner or the chief examiners for each of the papers have indicated over and over again that as far as the thing is in the syllabus, they're going to be bringing it. So don't say, oh, I'm going to master this. I'm going to master this. I'm going to master that. I'm going to master that. You don't master anything. You have to understand the principles underlining each of the various issues in the syllabus. So you are doing financial reporting. Awesome. Okay. Financial reporting, consolidated financial statements. You said, oh, me dear, the P&L, consolidated P&L is some way. So I'm mastering statement of financial position. What are you smoking? Like, what's wrong with you? Why will you master position when P&L and position are all consolidated financial statements? So it's not about mastering, it's about understanding the basic principles in that particular case. It's about understanding the basic principles. Because when it comes to consolidated financial statements, there are basic principles you must understand. How to get consideration transferred, your group structure, how to calculate goodwill at acquisition, goodwill at the reporting date. There's a difference between goodwill at acquisition, goodwill at the reporting date, how to deal with intra-group trading. I see some of you guys joining. You are welcome. This is a live Q&A session, and I'm also providing you with some strategies on how to revise and what you have to do in the exam hall. So put in the comment section for me or the chat any questions you have or something you would want me to share my thought on. I'll really be pleased to do that and provide you with some answers and some guidelines as we wrap up in the next few days to be able to pass the examination. All right. So please put it in the chat for me. So you don't have to master. That's my take. Technically, you don't have to master. You have to understand the basic principles. So when it comes to consolidation, intra-group trading, goodwill calculation, dealing with issues about fair value of consideration transfer, the group structure, these are the things you must understand, the basic principles, so that irrespective of what the examiner brings, you know the basic principle. So you just apply. And some of you think, oh, I'm going to solve questions from 1947 to 2002. And Charlie, inshallah, I mean, I will solve the question. I'll go to the exam. Or please, you will do that and still go and fail. Let me explain. You may do that and still go and fail. This is the reason. You see, when you refer to the past questions from the November 2019 to August 2022, when you refer to the past questions, it's the same topics. Consolidation is there, standards are there, corporate restructuring, financial reorganization, business valuation is there, ratio is there, and then the question 5, ethics, and all those things are there. But each time, the structure of the question is different. The examiner is not in the repetition mood of the structure or the context of the question. That is why I tell people, do not just rely on the past questions and think you solved the past question from 1947 to August 2022, so you will pass the exams. You may go to the exam and there is nothing in your head. Because it is not just about how many questions you solve, it's about understanding the basic principles underlining the topics. So, like I said, consolidation. You must understand the basic principles about consolidation. How do we calculate fair value of consideration transferred? The 4 elements there, how do we treat them? Goodwill at acquisition, how do we do that? Fair value adjustment, how do we deal with them? Intra-group trading, you must understand all the things. If parent sells to sub, how is the treatment done? If sub sells to the parent, how is the treatment done? If parent sells to associate, how is the treatment done? If the associate sells to the parent, how is the treatment done? So it is not about solving 10 billion questions. It's not about solving past questions from 1947 to August 2022. That will mean you will go and pass the exams. If you don't understand the principles, you can solve 10 million questions. You may go to the exam hall and still don't have an idea about how to deal with it. Because this is the thing. 99.9% of the time, the question that will come in the exam hall, you've not seen it before. The structure of the questions, the tenses, the language, the verbs, the active verbs the examiner is going to be using are all going to be different from the past questions you referred to. That is why I tell you all the time that you have to look at questions outside the ICA past questions. You look at questions outside the ICA past questions, because the past question you are looking at, it won't come again. That particular question you think, oh, I have solved it, I now understand it, it won't come again. Emba, it won't come again. But the topic, the standard, will be examined again. So you must understand the principles, not that question. Because I've had people, I mean, you know this already. I've been doing this a decade now. Like, I've had people there like, I've solved all the past questions, but now when I take this question, I can't do it. I'm like, it's not about solving the past questions. It's about spending time to understand the principles. If you want to pass the December 2022 examination, you must understand the principles. That's the only way out. You must understand the principles. That is your only ticket out. I don't care how many questions you solve. I don't care who the heck taught you. But if you don't sit down to understand the principles, you will not be able to pass the exams. And I've said this. On the average, 70% of the students going to sit for the December examination will fail. That's the statistics on the average. 70% on the average of the students going to sit for December 2022 will fail. Will you be part of the 30%? If you're going to be part, you need to practice assiduity. Sit down and study. Sit down and understand the basic principles. Sit down and spend time on the topics. Don't spend time trying to, hey, I've seen question from Ghana. Hey, I've seen question from Uzbekistan. Hey, I've seen question from Ethiopia. Hey, I've seen question. What are you doing to yourself? You've seen question from Germany. You've seen question from Togo. Then, like, you are being distracted because questions are coming in. Your friends are sending you, oh, this is our mock, oh, this is our question. Oh, hey, our lecturer, he said that. I mean, these are the areas that are coming. What are you doing to yourself? What are you smoking? Who is spewing that rubbish into your head? You must sit down. I'm not saying don't refer to other questions you are getting, because as you heard me saying, you have to solve questions outside the ICA questions. But I'm saying, don't be distracted about how many questions am I going to solve. Ask yourself, do I understand all the principles? The topics will be in the exam hall, but the same question in the past question will not be examined. It will not be examined. 99.9%, it will not be examined. So if you're solving past questions, are you wasting your time? I don't know. Because if you solve past questions from 1943 to 2022, and you think because of that you pass the exams, I'm sorry, because if I hit you with a question right now, you will screw it up. You will screw it up. Because I've seen people, they are like, yo, I've solved all questions, all the ICA past questions, Charlie, this thing I understand. Then I hit them with a question. Like, because I have a library of questions. I put together questions. I give it to them. Take, solve. They were like, ish, Nhyira, I'm able to solve the past questions too. But when it comes to your questions or when it comes to other questions, I'm not able to. I said, no, it is not about the past questions you've solved. You don't understand the principles. That is your problem. So please, in the next 10 days, okay? Is it up to even 10 days? I don't know. That's less than 10 days, Nhyira. I don't know. But in the next 7 days or whatever the heck, sit down. Don't rush. Don't try to look for things. sit down, take the topics one after the other, and make sure you understand the principles underlining each of the topics. So somebody may ask, Nhyira, can I understand all the principles? Yes. Your brain is bigger than anything in the world. You can understand the principles if you are guided properly, you have the right materials available, you can understand the principles. But a lot of you are looking for shortcuts because for the last 11, 12 weeks, you've not been studying. You've been working, family, girlfriend, boyfriend, chasing money. All that is good. But you've not sat down to study. But now that we have less than 10 days to go, you are looking for magic pills. So you are just putting your eyes down, your ears down. Hey, then ever, hey, okay, hey, this is the mock they did there. Oh, okay, oh, let me do this. Let me do this. You are buying pressure for yourself, and I can guarantee you, 99.9% of the time, you will be among the 70 people that will fail the exams. Because it is not about the questions you solved. It is not about who taught you. If you don't sit down to understand the principles well by yourself, it will just be waste. It will just be waste because we have great tutors and tuition providers available. Great, excellent, very eloquent, very intelligent in their presentation. Very, very great. But why are students screwing up like that? It's because you guys are not learning. You are lazy. And you just give yourself excuses. My wife, my husband, my children, my this, my that, all are important. If those things are important, stay with them and stop buying pressure for yourself for this ICA journey. So that is my recommendation. That's my recommendation. Any questions, please put it in the chat for me. There's a live Q&A. I want to take some questions from you guys as well. Let's see, what do I have here? Some comments coming in. Let's see. Posheli said, good afternoon, sir. Good afternoon, Posheli, for joining us on the stream. Jalu Man said, good evening, sir. Good evening, Jalu. Thanks for joining us on the stream today. Joshua Boachi Adam said, good evening, Shira. Good evening. Please, can you throw more light on the strategic case study precinct? I don't know what the heck you mean by throwing more lights, Joshua. What do you mean by that? Throw more lights? The case study is giving, what lights do I need to throw? I'm not the one who said the question. No. So I'm not the one who did the case. So if you say throw more light on the case study, like what do you mean? Maybe ask me something specific about the case study, Joshua, and then maybe I can provide it with something. But if you say I should throw more light on the case study, I don't know what you mean by that, frankly speaking. So Joshua, if you're still on the stream, you can put in the chat for me something specific. If you say throw more light on the case study precinct, what do you mean by that? Okay. So give me some specific, something specific. Hi, sir, I sent you a test on Telegram, but I didn't get a response. I want to join your class for management accounting from Zambia. You can send us a message on WhatsApp, Telegram. I don't know. I'm not always that active there. So probably let me even check right now. Send a message on Telegram. When was that? Because I didn't even just open the app though, but I cannot even see any messages. Are you sure you send message to Nhyira Premium? Because even if it is sent, it should be able to, yeah, you should be able to get a reply. But you can send us a message on WhatsApp. That my assistant is available on that and will be able to assist you on the procedure that you have to go through. Our registration will commence first week in December for our next intake. So you can send her on WhatsApp and then you'll be guided. Samuel and Son said, sir, please, what are risks in ethics? What do you mean by that? When you say what are risks in ethics, like what's that? What's risks in ethics? I don't know I don't understand the context of the question. Because when it comes to ethics, we are dealing with threats generally that the entity it's going to be exposed to, or the individual is exposed to. So give me the context in which you are asking the question, because if it's a risks in ethics, I mean, I don't know what you mean by that. If a business is not ethical, okay, a business doesn't take care of the environment, a business is not socially and environmentally responsible, that means we can consider that the entity is not ethical. Okay. Now, because the entity is not ethical, the entity may be exposed to what we call reputational risk. Are you getting it? So, when an entity is considered not ethical, then it will be exposed to one of the risks that businesses are exposed to, and that is called business or reputational risk. Are you getting the idea? So, I don't know the context in which you are asking the questions. Maybe if you give me some context, probably I'll be able to provide you with a better answer in that case, Samuel. So maybe give me some context, then I will understand the question that you are trying to ask pretty well. I see some of you guys joining. You are welcome. This is a live Q&A session. If there is any question that you have for me, something you want me to share my thought on specifically, be specific, hit me in the chat or the comment section, and I'll provide you with some answers. Jeff Royal Danso said, great tips. Thanks. All right. Always a pleasure, Danso. And thanks for joining us on the stream. Kofi Sefi Yao Owusu Ansa Cecil Pesewa, and then Sultan Said Umar. Thanks very much, guys, for the for the thumbs up and the sharing on Facebook. And then for those of you on YouTube with a thumbs up, also really appreciate it. Remember, tomorrow I'll be coming your way as well on the live stream at 7 p.m. tomorrow, so that we will be able to do some Q&A, and I will be dealing with some few issues depending on the questions that we are going to be having generally. Posheli said, do you have any recordings on IAS 21? Yeah, you can check the channel. We have close to 700 videos on the channel, so you can check the accounting standard playlist on the channel, and you should be able to have that there in that particular case. So check that in the channel in that regard. So you can check on the channel IS21. I think we should have a video on that on the channel. You can check on that. If not, too, you can download the Nhyira Premium mobile application, because in our mobile application also we have videos, some videos on the mobile application which are not available on our YouTube channel, because they're exclusive to the mobile application. So you can download the mobile application as well, and you should be able to get some great videos also on the mobile application in that regard. Then I'm seeing a chat coming up saying, please, if you can go into details on McKinsey 7S. Okay, so the idea about McKinsey 7S is that it is a model that is used in strategy implementation. According to McKinsey, entities are required to have in place these 7 factors that will enable them to successfully implement the strategies. Okay, that will enable them to successfully implement the strategies that they want to implement. So let me see if I can bring my slide on that quickly. Let's see, what do I have? Manuscripts, strategic case. Okay. Let me see if I can bring my slide on that and then maybe run through that quickly. Any other questions, please put it in the chat for me. I want to hear from you guys. So there are 7 factors. 3 are soft, and then 3 are hard. Then the other one is neutral in that case, but it is a strategy implementation model. Give me a moment. I'm bringing my slide and I'll share my screen in a moment as well to show you that. Yep, I've seen my slide here. Let's bring up my screen. Any questions, please put it in the chat for me. Okay, so I'm sharing this from my manuscript on our book on strategic case study. Okay, so there are 7 factors. So we have strategy. I mean, there. This is the formal stated goal or objective that the company is seeking to actually achieve generally in that regard. Then the structure, the organizational structure is very important. Okay. And remember, the success of the strategy depends on the organizational structure in place. Is it a decentralized organizational structure or centralized organizational structure? Is it um, a formal organizational structure or an informal organizational structure? That would determine whether the strategy will be successful or not. Then systems. It is important we put in place procedures and how information are transferred within the company. So we have to have efficient and effective systems in place to ensure that the strategy will be successfully implemented. So the strategy itself, it has to be evaluated. And there are 3 criteria that we look for. It is something I call the SAF principle, which is suitability, acceptability, and then feasibility. Suitability, acceptability, and feasibility. So the strategy itself must be clearly thought out to be able to achieve certain goals. Then soft factors, we need to look at the staff that we have within the company and whether they possess the skills necessary. Where they don't possess the skills necessary, we would have to see and outsource. But it's important we look at the style of management. Is it an autocratic management style or a democratic management style? What kind of management philosophy and leadership style does the management have? That will also determine whether we will be able to successfully implement the strategy or not. But all these will be tied together when there is a common shared value. So all employees, all key stakeholders of the entity must have that common shared value in order to ensure that the strategy that is being worked on is achieved by the organization. So according to the McKinsey consultancy firm, these things must be looked out for to ensure that the strategy that has been selected, which the entity seeks to implement, will successfully be implemented on the overall in that particular case. So that is the idea about the McKinsey 7S model. Any other questions? Please put it in the chat for me. Posheli said, okay, thanks very much. Always a pleasure. Benjamin Labi said, sir, good evening. I'll be writing CA papers next year and hoping to enroll in your classes. Okay. Our enrollment will be open first week in December. So you can actually register and enroll, and then you start learning even before the live sessions, which will start on 7th of January 2023. So because your enrollment will give you access to the the April 2022 lectures and then the December 2022 lectures. So you can actually study ahead of time before we start with the live lectures on 7th of January 2022. So enrollment will be open first week in December. That is, I don't know, maybe next week or so, something like that. Please, can you throw light on the employment benefit IAS 19? What's specific under IAS 19? That's a broad area. What's specific about IAS 19? It's a broad area. There are some questions if you ask. I don't know how I will answer the question. More light on this. What would I say? Because lecture. Are you getting it? It's a whole. Is it true more light? I don't know what kind of light I can throw though, but it's a whole lecture. Now, the idea about employment benefits has to do with how much and how we account for the amounts entities pay to the employees for the service that they have rendered to the organization. And generally, what is going to be happening is that employee benefit to be categorized into 4 main categories. So give me a moment. Let me bring up my slide on that quickly, and then maybe I can, go through that with you. Okay, so all the employee benefits can be categorized into 4. Again, this is coming in from my book on financial reporting and corporate reporting. It's important we make these disclosures sometime because of copyright issues. So, classification of employee benefits. So, we have short term employee benefits. These are employee benefits that are payable within 12 months to current employees. So, usually these will be wages and salary, pay, leave, and other social security benefits. And they are paid solely to current employees. It's important you understand that they are paid to current employees for the work that they have done during the year under review. So technically, the double entry for that we'll write it off in the profit or loss. So we'll debit profit or loss. So you debit P&L, and then you will credit cash or maybe pay current liability if it is outstanding at the reporting date. But be careful. If those payments relates to the construction or manufacturing of an asset or an inventory, then we will rather include it in the initial cost. So you rather debit PPE or debit inventory or debit an investment property as per whatever accounting standard being applied, and the credit will still be either cash, where if you have paid it, current liability if it is not paid. So if the wages and salary that we are paying relates to an inventory that we are manufacturing to sell or an asset that we are constructing to be used in-house by the entity, then we won't record it in the P&L account because you can't expense that amount. It has to be what? Capitalized in the books of the entity. Are you getting it? It has to be capitalized in the books of the entity. So that is short-term benefits. No worries about that. Either we write it off in the P&L or something like that. Then we go to post-employment benefits. These are payments to people who go on retirement. Okay, post-employment benefits. But when it comes to the post-employment benefits, also there are two things that you must understand there. We have the defined benefit, scheme, and then defined contribution scheme in that particular case. So there are two types of these guys that you must understand. Now, defined, there is a distinction between these two, and it is important you understand it because the accounting for it is going to be different. So, defined contribution scheme, what happens here is that the entity just have an obligation to pay or to contribute a specific amount into a fund. So, what happens is that any actuary gain or loss will be borne by the employee. So, with defined contribution, it is where the employer says, oh, okay, we are supposed to pay $100 into your pension fund every year. Okay. If you go on retirement, whatever is in the fund is for you. And if per the deal, if you go on retirement, you're supposed to have $1 million in your pension fund. If the company is adopting a defined contribution scheme, then if you go on retirement and the money in the fund is not up to $1 million, and with this haircuts going on in this part of the world, many people will go on pension and they will not have anything in their pension fund. So maybe you're supposed to get 1 million, but by the time you go on pension, the money in your fund is just $70,000. You bear that risk. It is called defined contribution plan. So under that, it is the employees of the company that will bear any actuary risk or investment risks that will be associated. So that one, the employee will bear the risk. But a defined benefit scheme, that's where you want to be. This one, the entity will pay the agreed pension if the employees go on retirement. So if the deal is that if you go on retirement, you're supposed to have $1 million. If you go on retirement, the company will give you $1 million. It means no matter how the investment fund performs, the pension fund performs, you don't care. So that one will be in the hand of the entity. So with defined benefits plan or scheme, what is going to be happening is that the risks will be borne by the entity. Because of that, there is a way we account for defined benefit plans, and you have to recognize assets, recognize the liability. And like I said, this is a whole lecture in that particular case, and this is a Q&A, so I'm not going to really go deeper into that. So short term, post-employment, then we have termination benefits. Termination benefits are the benefit that we pay to employees for terminating their employment before retirement. That's termination benefits. The payment made to employees as a result of terminating their employment before their retirement, and that is termination benefit. And that may also be written off in the P&L account, or depending on the context of the question, how it's supposed to be treated. So, like I said, IAS 19, it's a whole master class on its own, and that is what I can say here for the brevity of time, so that I can take other things as well in that particular case. So, Benjamin, that is what you must understand there. Any other questions? Put it in the chat. Kofi Nsia has stayed in the United Kingdom for several years and has decided to return. Why are you putting a question here for me to solve for you? I'm not going to do that. Though. If you have a specific question, ask me. I mean, I'm not answering questions. I don't do that, and we see this a lot in my DM on Instagram, on WhatsApp, and various other platforms, LinkedIn. People send questions and want me to solve for them. I don't do that. I don't do that. So because maybe it's an assignment you've been given, or it's a test that you are doing, then you send it over for me to solve for you. No, I don't have time for that. So please, some of you do this. If it's a question like this you're putting up, I mean, I'm not going to comment on it, because if it is an assignment you've been given, I'm not the one to answer your assignment for you. I don't do that. So you have to be able to do it. Maybe it's a test you are doing, you have to be able to do it. I don't do that. I don't do that. I've had people sending me questions, wanting to pay me for me to solve. I don't do that. I don't do that. You have an assignment, you've been given an assignment, me, I should solve for you. Then you get zero. You'll get zero in that assignment. So please, unfortunately, I will not be able to take that. If there's any specific question you have, you drop it. I can provide you with some answers, but trying to paste the question down, I will not be able to comment on it. All right. I agree with you 100%, Nhyira. I solved the whole 2 exams kit, but still could not make it last exam sitting. I am hoping for the best this time around. Okay. That's important. So my recommendation, Porsche, that is, who is that? That's Posholi. I think your first name, Malebohang. But let me stay with the second one. I think that is lovely. I'll stay with that. Posholi. Uh, like I said, it's not about how many questions you solved. It's good to solve a lot of questions, but it's not about how many questions you solve. It's about the fundamental principles. Are you getting the idea? Fundamental principles. So instead of spending time to try to solve questions from 1947 to 2002, ask yourself, if I take this topic, do I understand all the basic principles? That's my take. And that is what I do always with my students when we are going through something. I say, hey, listen, sit carefully, listen carefully. It's about the principles. And when we are solving question, I just refer. I said, hey, it's the principle you are applying. So no matter the question, is the principle. So I'm hoping that you will put the question kit aside a little bit and then spend some time to go through the topics and write out the principles. Make sure you understand them very well, so that if you go to the exam hall, you will be able to go through. Because the truth of the matter is that the questions that will come in the exam hall is nowhere near what is in the question kit. So what would you do? What would you do? That is the idea about that. So that's good for sharing that with us. And I wish you all the best as you go into the exams. Any other questions for me, please? Any other questions for me, please? Let's see. What do I have? I've sent a text on WhatsApp. Okay, so you'll be assisted on how to get an enrollment pretty soon. Any questions, please? Put it in the chat for me. Put it in the comment section. Sorry, can you help? Sorry, can you help me understand more of double taxation? That is a whole lecture on its own that I cannot do in a live Q&A session. If there's any specific issue you have about double taxation, I could talk about it, because double taxation is a huge area in that particular case. Because which part should I talk about? Is it the countries Ghana has double taxation arrangement with? Is it how to deal with the elect to relinquish? Is it how to deal with calculation of the foreign tax credit? Is it how to uh procedures for claiming double taxation? So like it's a whole thing. That's a whole topic on its own. All right, that's a whole topic on its own, Steve. So what exactly would you want me to talk about? Because it's a whole class and there's a live Q&A. I cannot treat a whole topic in that particular case. Jeremy, sorry, what? Jelome. I don't know if I got that right. Aku, can you please briefly summarize IFRS 2? Okay. IFRS 2, share-based payments or share-based transactions. Technically, it's about how we account for transactions that involves shares or transactions that we will settled based on the value of shares. So two things. So any transaction where the entity would have to receive or pay shares, okay, is a share-based payment transaction, or any transaction or event where the entity will make payment based on the value of the shares of the entity, then it's a share-based payment technically in that particular case. And there are treatments of it and how they are supposed to be dealt with in that particular case. So we have cash settled transactions and then equity settled transactions. Cash settled transactions are going to be liabilities usually, and equity settled transactions are going to be recognized as equity. And then we can narrow it down to what is given to the employees of the organization as a form of a golden handcuff, so they can work for the company for a number of years. And under that, we have share options and then share appreciation rights. So what happens is that share options are usually settled in equity, and share appreciation rights are usually settled in cash. Because of that, share options will be recognized under other components of equity on the face of the statement of financial position, whilst share appreciation rights, because it will be settled in cash, it will be recognized under liability. Now that could be current or non-current based on wherever, uh, based on the time from the reporting date that it will be settled. Two, the fair value of share options are determined on the grant date. The grant date is the date on which the option is announced. So fair value of share options are determined on the grant date. So it doesn't change. Usually it remains the same over the term or the vesting period. Let me use the right word. It remains the same over the vesting period. But with share appreciation rights, the fair value is always the current share price of the entity. So that keeps on changing at each reporting date, in the within the vesting period that you must understand in that particular case. Then number three, provision for share option and then provision for share appreciation rights is made to only employees expected to remain in the employment of the entity at the end of the vesting period. So that figure may also be changing every time. Okay, again, that is a whole lecture on its own. So if you ask for a summary, probably that's what I can say there in that particular case. Let me know if that makes sense to you. And then Joshua said, please, how critical success factor assist in strategy? Critical success factors are areas where an entity must excel in order to ensure that it's achieve its strategic objective generally in that particular case. So for instance, whatever company that we are dealing with, customer satisfaction may be a critical success factor. Quality product or services may be a critical success factor. Employee training and development may be a critical success factor in that particular case. So areas that the location of a business may be a critical success factor depending on the business that we are dealing with or the business that is in question in that regard. So the location of a business could also be critical success factor. Now, how does that assist in strategy? Means that whatever strategy that we select must help us to be able to achieve the critical success factors so that we can gain competitive advantage. Because remember, the reason why entities exist generally is because they want to gain competitive advantage. And the only way you can gain competitive advantage is to adopt a strategy. And then, according to Henry Madsbeck, strategy must have five, features generally. So it should be a plan. It should outfit competitors, not to be easily copied by other competitors. So whatever strategy we are adopting, it should fit in achieving what our goal on the critical success factors, so that we can gain competitive advantage. So, for instance, if one of our critical success factor is customer satisfaction, then what strategy can we adopt? We can adopt a strategy of ensuring that we produce quality products, we deliver the product to the customers as soon as possible when they place the order, and we make sure that we have after sales services. When we do these are all strategies that we are adopting, and it will help us to then satisfy the customers, which is the critical success factor, in which case it will help us then gain competitive advantage, making more money at the end of the day. Does that make sense? So that's how critical success factors can assist in the strategy development in that particular case. Any other questions? Put it in the chat for me. Dazi said, "Sir, please help me distinguish between deferred tax and current tax." Right. Deferred tax is the future tax consequences of a transaction. Current tax is the tax payable based on, you know, current profit or today's profits. Does that make sense? So deferred tax is the tax that we are likely to pay in the future, and that is recognized as a non-current asset or non-current liability, depending on what we have. But current tax is the tax that the entity may be paying based on the current year profit, and that is a current liability on the face of the statement of financial position. So whilst deferred tax is current, non-current, current tax is current. I don't know if that helps you there in that case. Ebenezer Kofi Adabo said, "Hello, sir. Under earnings per share, is right fraction applicable to bonus issue before the right issue?" I don't know what you're trying to say. I'm trying to understand what the heck you're saying. Let me take that again. Hello, sir. Under EPS, is right fraction applicable to bonus issue before the right issue? I don't understand what you are trying to say. Like, what's the rationale? I don't understand. Maybe give me something specific, then I can provide you with something specific as well as an answer. Because I don't understand what you're trying to say. Because in bonus issue, we calculate bonus fraction. And the way we calculate bonus issue in bonus fraction is different from the way we calculate bonus issue, a bonus fraction in right issue. So if we say, is it applicable to bonus issue before the right issue? Like, I don't understand. I don't understand. So give me something specific, probably. Then I can give you some answer or an answer there. Thanks for the summary of IFRS 2. Okay, Jalome Aku, thank you. That's good there. Aruna Cisse said, good evening, Nhyira. Please throw light on best estimate approach and expected value under IAS 37. Right. So best estimate is based on, previous information generally available. So an entity can say that, okay, in the past, if we repair something, customers buy something, there's a probability that 40% of it will be returned. Okay. And that is what has been in the past. So based on that, if we now sell today, we'll make a provision of 40% in the books of the entity. So usually best estimate will be based on what has happened in the past, and that becomes the basis for our provision currently. Expected value is where we are bringing in probability. So we are not relying on what has happened in the past, but we are trying to predict what will happen in the future. So expected value deals with probability. So if we sell, the probability that we will pay repair of 100,000 is 0.1%. The probability that we'll pay 200,000 is this percent. The probability that we'll pay this is this percent. So we multiply the results up. So technically the calculations are the same, but best estimates makes reference to what has been done in the past, what has been done, what has gone on previously, and that becomes the basis for the estimation of the future. But expected value looks at probability, what will happen in the future, not what has happened in the past, but the calculations are all going to be the same in that regard. The calculations are going to be the same in that regard. So Aruna Aku, let me know if that is okay for you. Then Jelome Aku is saying that what? Please, based on the pre-seen case study for December, what key models should we expect? You see, my take about all these is not about what you expect. Okay, let me pull it this way. It is not about what should you expect in the exam hall. It's case study. There are a lot of things in the pre-seen. So it is about understanding the case study and being able to work with the case study. So what do I mean by that? What I mean by that is, don't ask yourself, what model should I expect? Ask yourself, how do I relate to this case study? Because you need to look at who the stakeholders of the company are. What are the risks the entity is exposed to? What are the governance issues? Pastel, you have to do environmental analysis, external environment, SWOT analysis, internal environment. If there is something about industry, Paul test 5 forces. If there is something about, I don't know, Paul test diamond, like, it depends. So you must understand the case and then work your way into it so that you, and I've shared this. Okay, probably I've not shared on the stream here, but maybe let me bring it up. Let me bring it up. Let me bring it up. Strategic case study. Let me bring this up. I think I shared this with students last week on how they should approach the case study. I think it will be harmless if I share it with you here. So when it comes to the pre-seen analysis, like I said, it's not about what model you should expect or what should you be on the lookout for. It is about how you are supposed to analyze the case. So with the pre-seen analysis, these are a couple of things you have to take into consideration. What is the nature of the industry of the entity? So when you read the pre-seen, what industry is the pre-seen in? What are the current development in that industry? What are the challenges and risks facing the entire industry? Partly these are stated directly in the question. What are some best practices that they must follow? Who are the regulatory or what are the regulatory requirements, and who are the regulatory authorities in the industry that the company is in? It will be stated in the question. You must identify these things. Number 2, you need to look at the nature of the entity itself. SWOT analysis, PESTEL framework, governance issue, the risks that the entity is exposed to. Because in accordance with I've forgotten the name of the standard, but there is a risk management framework, but I've forgotten the name of the standard, ISO 300 also. But there are 3 elements that we need to look out for: how the entity is exposed to the risks, the various risks protocol that the entity has. So we have to look at the risks that the entity is exposed to, the impact of the risks, and how we can mitigate those risks. So as you read a case, you have to identify what are the risks that the entity exposed to. And there are various types of risks: market risks, derivative risks, liquidity risk, reputational risk. There are various types of risks available. Then financial issues. Financial issues. I think there was a financial statement they gave in the question. So you must calculate some ratios, deal with working capital cycle, and some various other issues. You have to look at that. Then you have to look at the key models, applicable models that is in the question. So based on the mission and vision of the company, Porter's generic, you can, have an idea of what kind of strategy the entity should be adopting under the Porter's generic strategy. Should it be a cost leadership strategy, differentiation strategy, or a focused strategy where they can adopt focused differentiation, or how do we call it? Focused leadership strategy. Then the industry information. If we are giving information about the industry, Porter's 5 forces. Now listen, you have to prepare it. You have to prepare it. Now, let me give you a sneak peek of what I mean by that. Let me give you a sneak peek of what I mean by that. Give me a moment. Let me try to bring this up. This is our case study analysis. So let me give you a sneak peek, for instance, to pistol frame. Okay, let me give you one of the models, a sneak peek to one of the models. What do we have? Okay, maybe let me do the first one, stakeholder mapping. So one of the things you need to know about is like who the stakeholders of the company are, what interests they have, and what power they have, and the influence they have on the organization. And with the stakeholder mapping, we will be using the Mendeley matrix. And based on the Mendeley matrix, based on the pre-scene, you realize that their stakeholders are customers. One of the core values of the company is that, I mean, they make sure that they produce quality product and satisfy customers. So customers, what is their influence? What will be their position? Are they likely to oppose any expansion strategy of the entity? Suppliers, what is their significance? Are they likely to expose? So when we say you are identifying the model and applying, that's the sneak peek. So this is our analysis of the pre-scene that we'll be discussing with our students tomorrow in our discussion in that particular case. So this is what I mean by that. So then employees are there. Would they oppose? Is there any reason? Who are the regulatory authorities? Okay, you need to look at that in that particular case. And even the customers of the company, they are categorized into a certain way, and there is an indication on whether the market is growing or not growing. So when we say pistol framework, the same thing. Pistol framework. So what are the economic factors available? Context it in the question that you are solving. So when I talk about the key models that you have to consider, that is what I'm trying to say. Okay, that's what I'm trying to say. So it's not about what model should I expect? No, it's about working with a question. It's about working with a question. Are you getting it? So environmental analysis, pistol, SWOT analysis, corporate governance issues, very important. Ethics, there will be questions on that. All other things being equal. Corporate social responsibility, is there anything about that you need to look out for? Then certainly financial perspective. It could be performance measurement, it could be budgeting issues, it could be investment appraisal, it could be working capital management, it could be sources of finance and dividend policy. It depends on the context of the question. But as you are reading the question, because in the exam hall there will be unseen information, so there will be an additional information. So if you're not careful, you may reach a certain conclusion whilst reading the pre-scene, but an additional or the additional information in the case study will change that. Okay, will change that. So that is how you have to analyze the case. So don't sit down and say, okay, what model should I expect? Like, read the case, and I believe that you are attending lectures, so definitely your lecturer will be able to, or your lecturers will be able to assist you to really walk through the case, like the way I've illustrated to you, and walk through the model. So it's not about, okay, SWOT analysis, Porter's diamond, Porter's five forces. Then you go and read Porter's five forces. No. How do you put that in the case? How does it apply to the case? Because in the exam hall, it's about application. All right. In the exam hall, it's about application. So that is what I would say there in relation to, the case study. Don't look at key models to expect. Look at what is in the case study and how does it apply to the entity. Then you understand those things. And if you go to the exam hall, definitely questions will be coming in from there in that regard. Then Aruna Sesi said, thank you, sir. Always a pleasure. Any other questions for me? Any other questions for me? Any other questions for me? Let's see. So Jalome, I think I hope that my answer to your question it's well understood. Ajekum Bat, and then Faisal, Edmore, Socrates. Thank you very much for the thumbs up and the sharing on Facebook. And for those of you on YouTube also with a thumbs up, thank you very much for that. So that's the deal there. So key takeaway. Don't spend time solving 1 million questions. Spend time understanding the fundamental principles. Whatever subject it is, there are fundamental principles. Take the topics and understand the fundamental principles. Take the topic and understand the fundamental principles. If you do that, you can position yourself to pass the exams, because the questions you are solving will not come in the exam hall. It won't be there. That question that you think you are solving, that's not what will be in the exam hall. Okay? That's not what will be in the exam hall. So it's about the principle. It's about the principle. It's about the principle. And it is important that you follow the principles rather than following questions. I'm emphasizing on this because, like, I've been in this game for a long time and I've heard people say a lot of things. Because you have people who would take questions from all other sources. Like I was saying, oh, this question is coming from Afghanistan. This question is coming from Puerto Rico. This question is coming from Saudi Arabia. This question is coming from Togo. Then, but before the day that they are going to write the exams, they have questions from 19 countries. How is your brain working? So spend time, understand the principles. Don't spread your wings. Don't chase things. If you understand the principles, I can guarantee you will be able to ultimately pass the examination. So tomorrow, God willing, I'll be coming your way on the stream again at 7 p.m. Will be another live Q&A session. So you can join me on the time as well. We can have some great discussions as well. And any other things that you have, I'll be able to, share with you there as well. But you got to sit down and study. Okay? You got to sit down and study, because 70% of you will fail the exams on the average. That is the extrapolation of the statistics. The statistics in the past, when we extrapolate it, that's the results. About 70% of you will fail the exams. And it's not because you're lazy. It's not because like you didn't work hard. It's because, you failed to follow advice and recommendations. Simple. Okay? Because some of you, as of now, I think you are still not serious. You are waiting 3 days to the exams. That's when you start being serious, because you feel that, oh, when me, the way Nhyira, the way my brain works is that, you see, when it's 2 days to the exams, that is when I learn, I can remember. What are you doing to yourself? You are doing baba. Then you finish writing the exams and you are exhausted. Results come and you failed. You have done that in the past. It didn't work. You are still doing it again. Then you keep on complaining, ICA is difficult. ICA is difficult. What do you expect? You are lazy. You don't follow recommendation. You don't work the way you are supposed to work. So it will be difficult for you, because the exams that you claim is difficult, someone who was overall best student, does the person have 2 heads? Does the person have 16 brains? No. So work hard. Make sure you understand the principles well. I'll come your way tomorrow, 7 p.m. on YouTube. I think we'll be early on YouTube. So join me 7 p.m. tomorrow, still on the live stream, and then we will see how far we can go with the live sessions and answer some questions, provide you with some answers, and hopefully give you some guidelines in that particular case. So Jeremy said, thanks, sir. Thank you, sir. Sorry. Well understood. Okay, that's great. Then Silence Dodu said, sir, kindly touch on money market hedge and forward contracts. Right. Forward contracts are simply arrangements where an entity enters into a binding agreement with a finance house, a bank, or a forex bureau to maybe buy or sell a certain number of currency at a certain time in the future. So let me give an example. You know, our Ghana city is really dancing a lot these days. So let's say we buy from a supplier in China. We are supposed to pay $100,000 in maybe January 2023. So per our speculations, by January 2023 that we will need $100,000 to pay the supplier, the currency would have depreciated further because of the Christmas and all that. So the currency would have depreciated further. So what we could do is that we could go to a finance house, a bank, and say, hey, we will need $100,000 probably on 15th of January 2023. And what rate will you give it to us if we come and buy $100,000 from you 2023? So we negotiate the deal, and then it becomes binding in that regard. So what then happens is that in 2023 15th we will go, and when we go, the prevailing rate will not apply to us. We will pay the predetermined or agreed rate on the 15th of January. Two things could happen: either the Ghana cedi had depreciated further, which will be to our advantage, or the Ghana cedi has appreciated, which will be to the advantage of the finance house or the bank in that particular case. So that is the idea about forward contracts. But money market hedge, on the other hand, has to do with like it depends on what we are doing. So the same scenario that I gave, we need $100,000 on the 15th of January 2023 to pay our supplier in China. So instead of agreeing with the company, instead of agreeing with the bank to give us a rate on that date, which will be a forward contract, money market hedge is where we can borrow $100,000 in present terms. Okay, so we'll borrow an equivalent of that, and certainly we'll pay an interest rate on it, but that's fine for us. Then we'll deposit that into a foreign investment account. Then the deal is that from now to the time we need the money, the interest on the money will be up to the foreign currency that we need. Then we can make the payment directly from the foreign currency. All right. Now, so we will now owe the bank, and we borrowed the foreign currency in Ghana cedi terms here in Ghana. So we'll pay them a Ghana cedi. That is another way we have just dodged negative movements in the exchange rate. So we need $100,000 15th of January. We'll borrow an equivalent of that right now and then put it in the investment account, and then we will put that money there. Interest will accrue on it, and then we will be able to then pay directly from that account. But we'll pay the bank an equivalent in Ghana cedi, since we'll be borrowing in that currency in that regard. So that is basically the idea about how we deal with that. Assuming we are going to be receiving money from a foreign country and we don't want to suffer the exchange rate, still in money market hedge, what we could do is that we will borrow the foreign currency we expect to receive in the present value of that foreign currency. Then we'll convert it to Ghana cedi. Are you getting the idea? Then we put it into again an investment account in that particular case. So the idea is that by the time that the money will be received, interest would have accrued on the loan that we've gone for in the foreign currency present value. So what will happen is that once the foreign currency comes, we'll use it to pay the loan, and we already have our money in our currency sitting in an investment account. So there will not be any exchange rate movement in that particular case. So that is the idea about money market hedge, and then also forward contracts. That's the idea about money market hedge and also forward contract. And there are calculations about these things definitely in financial management, but you know, there's a live Q&A and we don't have questions available to share that. So silence Dodu, that is the issue relating to that, and that's how we deal with that. Any other questions for me? I'm going to wrap up here. Tomorrow 7 p.m. join me on the live stream, and we will continue with the Q&A, providing with some strategies and then answering your questions, as well as we wrap up for December 2022 examination. And hopefully you'll go in there and be part of the average 30% of the people who will ultimately be passing the December 2022 examination. So have a great weekend, and thanks for joining us. Really appreciate you guys for, the like, the sharing, the comments. Really, really appreciate. For those of you on YouTube who have not subscribed to the channel, make sure you subscribe to the channel and click the bell notification icon so that when we go live, you'll get a notification and be able to join me. And we will be having a couple of streams before and throughout the time of the exam. So you want to make sure you stay connected as we go through this. So have a great weekend. Continue to study. And I'll catch you tomorrow at 7 p.m. on the live stream. Bye-bye.